Today, we'll be looking at all the options related to and to help with model portfolios. So that's going to include just setting them up, uploading portfolio data, applying portfolios to investment accounts, and some extra tips and tricks along the way. So some quick housekeeping items before we jump in. The session is being recorded, and we will send you a copy after the webinar is over. It usually takes about 30 minutes to an hour, and it goes straight to your email. So if you're watching this with the intention of kind of working on your own model portfolios, just try and give me your attention for now. Try and absorb as much information as you possibly can for the next hour or so. And then again, 30 minutes after the meeting, you can get that recording and use that, rewind it, jump ahead, replay certain sections, whatever you got to do. Definitely makes it a lot easier when you're working on your own plan. Additionally, we're also going to have a Q&A session at the very end of the webinar, time permitting. So please feel free to ask questions throughout the webinar. The only thing I will mention, the way Zoom works for these types of webinars, I'm not able to see your questions as I'm doing the presentation. I don't see it till the end. So if you do ask a question, please just add a little context. Don't say something like, hey, can you do that again? Because when I get to it later, I'm not going to know what you were talking about. So definitely just make sure, you actually say what you're questioning about as well. But with that, we can just jump in. So let me share my screen for everybody. Bear with me 1 second here. There we go. All right. So today, we're doing model portfolios. So if you are a power user of RightCapital, you might be kind of looking at this like, hey, I already know how to use model portfolios. It's not necessarily the most complicated part of our system by any means, but we did want to highlight it today because there have been a couple of updates that do apply to model portfolios in the last few weeks or so. And additionally, if you're not super experienced with RightCapital, it's very important to understand how model portfolios work because they are one of the most, I guess I would say, like efficient time savers in the program. If you're manually setting up investment information and portfolios for every single client, account by account, that is going to take quite a bit of time. If what you have people invested in, or just have a general idea of what most people are invested in, you can set that up ahead of time and really save a ton of time. And that's what we're really going to dive in deep today. It's just really understanding this feature well enough where you can get the most out of it and hopefully just save lots and lots of time down the road. So to actually look at model portfolios, as you can see, I'm just on the advisor portal here. This is the very first thing you should see when you log into the software, right? I'm just in the clients tab. So this is the very first place you're brought to. To actually get access to model portfolios, I'm going to go to this model section right here in the advisor portal, right at the top. I'm going to click that, and then it's actually the very first thing that comes up, right? So when I open models, I can click portfolios, and I have these options right in front of me. So what is actually going on here? So mine might look a little bit different to yours, and that's because I have multiple portfolios at the bottom here. But what you should notice is no matter what type of plan you're on, you should have these portfolios right here. These are the default portfolios. So 1 through 7 here, from preservation to most aggressive, these are the default model portfolios for the system. This comes with every RightCapital plan. It's just so you have something in here to start with. They're very basic. They're just kind of like more popular estimates of certain portfolios, but they're not super specific. They're not specific to any type of client or anything like that. They're just available. So if you're kind of rushing through the program, you can just kind of select a model portfolio and you're all set. These can't be modified or deleted at the moment. That is a point of feedback, but that is something that, if anyone has any interest in, I can push over to the product team. That being said, these can be reordered. So especially if you have a lot of model portfolios that you work with, you can actually just drag these to the bottom. So for example, if I have a ton that I use, I can drag them down and have mine at the top, but just something to mention. Now, how do we actually set up a model portfolio? We'll kind of get into what all this looks like later, but I just want to start with a very simple, what is modeling a model portfolio actually look like in our system? And it's really very simple. What we're going to do, we're just going to go to add portfolio in the very top left here, right? I'm going to say, we'll say this is an example portfolio or just something like that. So I can rename it right in the top right here, or top left here, excuse me. I can press this blue check mark to save the title, right? So I can say this is my example portfolio. Along with that, I do have a couple of options right here. So as an example, I can rename the portfolio just by clicking the title right there. But if I click these 3 dots, I can also choose rename right here. I can also copy this portfolio if I want to build something off of it and I can also just delete it. So again, if this is a portfolio you've made, again, you can delete it. Just for now, you cannot delete the actual default portfolios that are baked into the system. Just something to keep in mind. Now, once that's figured out, you've named your portfolio, you can actually dive into what is in it. So a couple of really important things we're looking at here. First is the model type. There are two different ways to build a portfolio. The first is asset class based. And what this is we're quite literally just selecting the percentages we want for each different type of asset class in the portfolio. Very basic, right? So what I can do, I can go in here and say, hey, I want a portfolio that is, I don't know, let's say it's 70% US equities, large growth assets. Let's say it's, I don't know, 20% government bonds and, oh, I don't know, let's say it's 10% cash. Something very basic, right? So overall, we have 70, 20, 10. It adds up to 100%. If it does not add up to 100%, it's not going to work. So if I were to put in, for example, 110% in cash, I have a 200% asset allocation now. It won't even let me save. So if you ever come to the bottom here and it's grayed out, it's because you're over or under the 100%. Same example, if I just set this to 0, it's at 90. I can't save it. So just make sure that this adds up to 100. If you come in and just add in the numbers, you might see that it's above 100% because usually when you start a model portfolio, and I'll show this super quickly, when you start a model portfolio, it already has one of the assets in there selected as 100%. So just keep in mind, again, if it's not 100%, it's not going to save. Now, that being said, if I go back to this example portfolio, so actually I'll plug this right back in here, put that to 70. We'll put this to, I don't even know what I said before. Let's say 20 and 10%. Very simple. I can press save. It is reflected in the top left here as a 70-30 split. It'll even show me generally, based on my return assumptions, which we will see a little bit later, what my annual return percentage should be and what the standard deviation would be according to my kind of default return assumptions, right? So again, very basic. If you don't fret about the details of the model portfolios too much, you just need a general idea of what's in the account. This is a great option. Again, it's very customizable. It's very easy to set up. You can also do this within a client plan. Again, we'll get to that a little bit later. But if this is just the default you want, great, you got it. You're all set. Now, there is a more detailed version, and this is usually the one I'm going to recommend if you're setting up a model portfolio because we're doing the work ahead of time to really make sure that these are available for specific client plans, right? So if we're going to take the time out ahead of time, it's usually better to put in that detail. Again, you don't have to. It's not necessarily better or worse. But in my eyes, if you're going to set these things up ahead of time, the more detailed, the better, right? So if I go to this, now actually I will mention when you are switching between these model types, it is going to give you a warning. Basically, whenever you switch the asset types, it is going to delete whatever was in it. So for example, if I go back to asset class based, as you notice, it doesn't have my options in there anymore. So just keep that in mind. If you set up like a ton of holdings in here, and then you're like, oh, I just wonder what this looks like asset class wise, it's going to delete all the work you did. Please don't do that. We can't really reverse that once you do it. So just please keep that in mind. Ultimately, even if you're doing holdings based, like you can see, you still get the same graph and stats here at the very top. So you can see what it looks like and what the annual return is. So there's no reason to switch back over. Again, I just want to say that out loud. I haven't seen many people do that in my time here, but definitely when it happens, it can be, aggravating. So something to keep in mind. But anyway, I have it switched to holding based. If you notice, there's no option to actually just plug in these assets anymore. I can't just go in and say, hey, this is a 100% large growth model portfolio. I no longer have that option available to me. Instead, you have this button in the very top right, edit holdings, right? And when I click this, it's actually going to give me the option to add specific holdings and then assign them a percentage, right? So something I can actually do here, if I go to add holdings, I can go to add holdings and I can actually type in real ticker symbols for this model portfolio. So for example, I can go in and type in Apple, right? I can say, hey, this makes up, 10% of this portfolio, press save. And now that's just hard baked in there, right? We have information. We pull the actual ticker symbols from Morningstar. So as long as the information on that ticker is in Morningstar, we're able to bring it over. If it's usually like if it's a private equity ticker or something strange like that, if it's not in Morningstar, it's not going to carry over. That's usually when I'm going to recommend something like an asset class-based portfolio where it just kind of matches the return you're looking for. But again, if it's, a publicly traded ticker, chances are it's going to show up. So just something to keep in mind there. But I can just keep going, right? I can go to add holdings. I can add, let's say, VU, right? Just an S&P 500 tracker. Let's just say this makes up 50%. Great. I can do, oh, what else can I do here? Let's see. Let's go with, I got a separate sheet over here. All right, let's go for Verizon or something. Again, I'm just going to type in a bunch of different ones in here. I guess Verizon is now. Let's just do Visa. Great. Perfect. I can do that. Put an extra 30%. Great. Save. We're good. It even keeps track what the percentages are at the very bottom. And last one, I'll do add holdings. I think we got like a bond tracker one, right? There we go. Put that in, set to 10%, save. And now we have a portfolio that is made up of actual holdings. Now, one important thing to keep in mind here is that it is still doing it based on an allocation percentage. So at the end of the day, we are still tracking this as kind of like a general portfolio. Now, if you have a portfolio that has specific quantities of assets, right? That's not really what we're going to set up here. There's more options for bringing in that type of detail in a different way. I'll show that off a little bit later. But when we're doing model portfolios, again, these are kind of general use case portfolios. So when we're setting them up here, we're really just going to do it based on an allocation percentage. So that is something to keep in mind. This one, super quickly, I'm just going to press save. We can now see kind of that spread. Again, it's pulling information about how these are classified from Morningstar. I can see this all broken out. And now that's a portfolio that would be available within a client plan. Now, before I start moving away from the model portfolio page here, there is one more way I want to show you can actually upload portfolio information in here. So if I go to add portfolio, let's say this is going to be the upload portfolio, right? I'll save that in. I can switch it to holdings based. This is only available under holdings based. Go to edit holdings. Now, this is actually a new feature. I believe this was introduced a couple of weeks ago. I'll fact check that a little bit later, but it was added within the last month or so. What you can do is actually upload holdings via an Excel sheet, it's like a .csv file, right? So if I go to the very bottom left here and click this down arrow, there's actually an option to upload holdings. So if I click this, it's actually going to bring this page up. Now, one thing I want to mention really quickly, obviously I can't just upload a form here that has all that information, but I do want to mention there is an option to download a template. You don't have to use this, but generally it's going to make things a lot easier. It'll just download that actual CSV template. I don't think it's going to show up on my screen here. Actually, let me do this. I'll share this super quickly. So let me stop sharing for a moment. This is what the template will actually look like on your side. So let me just show this off super quick. There we go. So super quickly, just so you can all see it, this is what the template actually looks like. It's very basic. It's literally just security and allocation percentage, and you put the information in here, right? So what I can actually do, I actually have some of this already saved, but I can just go right in here, just kind of use the information from the last one we did. Copy this, bring this over here, right? So as you can see, again, very simple. It's pretty much the same look as what it was when we were entering it manually. I just have the securities and I have their allocation percentage, right? Very, very simple. I can press save on that, right? So I'm done with this. I'll go back to my other screen here. Bear with me one moment. There we go. All right, so now that I have that information in there, what I can actually do is drag that file over. So let me grab it from my browser here. There we go. So this is the file I just saved, right? Template 2. Put that in, and it's already in there. So as you can see, I've got, all the stocks in there. It's putting it down as mapped. Mapped basically means like, hey, we were able to tie it to a ticker symbol, so the allocation will stay updated. You can see that information's in there. I can press import, and it's all in there. Once it's in there, I can't actually go in and modify this manually, right? So I can go in and say like, oh, that's not right. This is actually going to be 30, and this is going to be 20. I can make those modifications. Great. Press save, and we're all set. Right? So again, very simple, especially if you use the template, it kind of just automatically uploads in there. There's not a lot of issues, so it's definitely something I want to mention. Now, There is one more thing I wanted to mention, and it's something that can come up when you're uploading holdings. So if you don't use the template, I just want you to be aware of what that looks like as well. So I'm going to call this super quickly upload to portfolio. Actually, I'll do a little bit less confusing there. Let's go upload portfolio 2. Switch it to holdings based, confirm, edit the holdings. I'll go back to the upload holdings option. And something I can do is I'm going to introduce an Excel sheet here that has a little bit of an issue in it. So I'm going to add in, bear with me while I kind of set this up. I'm going to put that in for a little bit too high. I'll add in a bunch of ticker symbols there. There we go. So I'll kind of mess that one up a little bit. And then what I can do, if I upload this file now, get this one in here. So this is a slightly different template I have available. You'll see that there's a different option here. So what are we looking at here? What we're looking at here is basically like, hey, these are the RightCapital columns we need in order to upload the information. We need the name of the security and its allocation percentage. Because the Excel file that I just uploaded does not have a column named allocation percentage, I need to ensure that that's in the right place, right? So if I go here, I can see that I actually have it named quantity. I can select that, press remap, and it will now bring in that information. Now, as you can see, this one is a little bit different than the other one. There's a couple issues in this file, right? So first off, this is not a holding, right? It's saying it. The security is not recognized. So while it is something, that maybe it's a private equity, again, holding or something like that. The point is it's not in Morningstar. It's not able to pick it up. Therefore, it's not going to bring it over. It says it's invalid. If I were to click import right now, this will not show up, period. So that is something important to mention. If you upload a file and you see any securities like this, and it will put them into their own section here at the top, these are not going to upload. So that is something very important to mention. You need to figure out, is that the right ticker symbol? Why isn't it in Morningstars as a private ticker? And I need something that's a little bit different. So something to keep in mind there. Another issue is it can track that this is not 100% total. As I can see, I got a couple different options here, but then I have this one. So obviously when I import this, this will be over 100%. Now I can still upload it. If I go to import, it will actually still import it. However, because it's at 160%, I can't save this. So just something to keep in mind. Again, you want to check that Excel sheet. Again, if it's not a holding that it can track, it's not going to upload it. As you can see, it didn't even bother pulling in that holding it couldn't identify. Additionally, if it does not add up to 100%, it's not going to stop you from uploading it, but you are going to have to edit it once it gets in here, right? So once I'm in here, I can bring this down and say like, okay, this should be 40% save. Now we're at 100%. I can press save and it's brought in, right? Again, I'm getting very detailed with this, but it's just a couple things I want to throw in there. Just double check your file before you upload it. Again, it's very easy to like accidentally add an extra letter or something to a holding and then it doesn't upload or something like that. Or you like add an extra 0 to a 10% or something like that. So again, it happens. They're very easy solutions, but just something to be aware of in case you upload your Excel sheet and go like, whoa, 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 nothing's uploading correctly, right? So that's definitely something important to mention. Now, with that being said, that is effectively really the entire process of just creating a model portfolio. Now we're going to get into, actually using them and that whole thing, but I just want to make clear what we looked over. Adding a portfolio for the most part is very, very easy. Again, you can plug it in, you can just do it as an asset class option, right? That's very simple. Like this one, for example, this is my portfolio for the Kent family. I go in, I just plugged in 60/40, press save, and we're good. This is now a model portfolio that's available, across the plan. You can also copy or duplicate these as well, right? So I can press that. I have another copy. So if I want to do like, hey, this is the Kent portfolio 2, I can go in, maybe make a modification here. Like this is a different alternative I'm looking at where they put 10% into cash. Great, save. That's now available. I can then drag and drop it wherever I need it to be. So now it's right next to that other one. Great. Again, very simple, and I can even delete it from right there as well. So overall, the actual process of adding model portfolios, not too bad. Before we jump into what this actually looks like within a client plan, there is just two quick things I want to take a look at. The first is if for whatever reason you're having any issues with this process, it's not quite clicking for you, you're not really sure how to add model portfolios, there is a Help Center article linked right here. So if I click this right under where it says add portfolio, this will actually bring me to the model portfolios page in the Help Center. And it has basically all the information I just brought in or I just talked about available in the article. There's a full breakdown of the default portfolios. It goes over the process of adding a portfolio and renaming it. It has the process of being able to duplicate a portfolio, the difference between asset class based and holdings based, and finally the option to upload holdings as well. So again, if you have any questions at all, you don't think it's working out, just check out this Help Center. If there's still no answer to your question on here, you can also just go to the support team, right? They're very well trained in the software. We work with model portfolios every single day. I assure you, every single day we work with model portfolios. So if anything comes up, definitely just reach out. They're a fantastic team, very well trained. They're definitely going to be able to help you with those questions. So anyway, slight tangent there, but I just want to make sure that, in case you run into any issues, you are not alone on this one. The next thing I want to hit on super quickly, and I'm not going to spend a ton of time there. This is a whole other webinar we can get into, is just, hey, where are these return percentages coming from, right? Because when we're looking at these model portfolios, as you can kind of see, when I plug these in, it's giving us an estimate of like, hey, what are the annual returns on this? What's the standard deviation for the Monte Carlo on this account? I just want to touch on where that information comes from. In this case, it's actually coming from our return assumptions. And to find those, very simple, you just go to this three dot icon right here, go to assumptions, and it should be this first page that comes up. Yep, right here. So what this is actually showing is just, hey, where are these return assumptions coming from? We have historical index returns and forward-looking assumptions as our defaults. So if you're confused on where those return percentages are coming from, it's right here, right? If I actually, and I'll do this super quickly, if I go to portfolio and just make it 100% large growth, you should see that these numbers are pretty close to what you're seeing in the return assumptions. I believe it's going to round up the standard deviation, but if I just save that, right, and then go to the assumptions, we should see that that lines up pretty well with what we're seeing here, right? Because it's got a volatility of 15.97%, total return of 12.2, and then when I jump back over, 12.3, 16%. So it rounds up a little bit, but ultimately it's just pulling directly from that. So if you ever look at this and you're going like, whoa, 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 that is way too high. I'm not sure where we're pulling that number from. Even if it's large growth, it shouldn't be that. It's coming from these numbers. So this is the default historical index returns. There's also forward-looking assumptions, which are a bit more conservative, right, but still volatile. And you can also make your own return assumptions a little bit more customized, right? So I can go in here, change this, set the capital gains to, 6%, brings up the return to 8%, press save, we're all set. I can also set this as the global. The model portfolios we see in here are going to pull their information from whatever is set as global. So you can actually change this from client plan to client plan. You might have someone who's very conservative. They don't think the market's going to do that well. So you set them to forward looking, which is definitely a lot more conservative, right? However, if it's not the global, it's not going to show here, right? So that is something important to keep in mind. If you're looking at this percentage and you're like, whoa, this is different from the percentage I'm seeing within a client plan, it's usually because the return assumptions are different. So just something to keep in mind. But anyway, those are just two small tangents I wanted to get to super quickly, just talking about where those return percentages and that volatility is coming from. But with all that being said, let's actually dive into a client plan and actually look at like what this turns into. So what I'm going to do super quickly, I'm just going to bring up that is not how you spell sample. I'm just going to do a random plan here, right? I guess I got this client, Sam Wayne. I don't even know if I've opened this plan before, but we're just going to use this as an example. Actually, this is perfect because it's not been touched before. So this is actually really good for us. So what I can do, and I don't have net worth on this one. Oh, darn. Okay, hold on. Let me do this one instead. Usually I do my sample plans. There we go. All right, we'll do a millennial sample for today. So once we have these model portfolios actually built, what is the actual use of using these within a client plan? Great. Supposedly, like I mentioned, this is a big time saver, but ultimately, great. I have a model portfolio. What do I do with it? Well, there's two main functions of a model portfolio within a client plan. The first is, as you might guess, we can just assign it to an account, right? So if I go to the profile over here and I go to net worth, right? So if I go to investment, we have multiple accounts in here. And let's say that my client here, Millennial Sample, we'll call it Mill, I guess. Let's say Mill has these three accounts and I need to set these up. Well, I can go in like I can with any account, right? And just for context, by the way, I'm under profile net worth of their plan. This is where I can dive into their investment accounts. I can dive into this top account here, and I can just go in and set the asset allocation for the account. So in this case, something that's actually been done here is that we've added holdings manually to this account already. This is not pulling from a model portfolio. We actually went into this account and added these holdings manually. I can add another one right here. Let's say they got some Apple stock, put in 10. I don't even know what that's going to be. Let's just say they have $500 worth of cost basis on that. Great. I've just added Apple stock to their portfolio. Should have reflected there. We're all set, right? So if I want to build an account manually, I'm still able to do that. That does not interfere with anything here today. Now, let's say I am recommending that this client open a new account. Maybe they're going to, they've joined my firm and I'm like, hey, you got a lot of money in this brokerage. I want you to open a different type of account. I want you to set it this type of way, right? What I can do is I can go to add account, investment. We're just going to add like a normal brokerage account. So we'll just call this Millennial Brokerage or something like that, right? They're the owner. We're going to set it to enter. Actually, we're not going to do that. We'll set it to enter total balance. Set the total balance to, let's say, $50,000. Cost basis is going to be, I don't know, 40 grand. And then at the very bottom here is where we would usually set the asset allocation. So again, there's a couple ways I could set this up. I could go in and manually include all the holdings for this account manually, right? I could just go in and set the asset allocation by percentages if I want to do, similar as we did before. Or typically the easiest option, if it's already set up, I can just click into asset allocation here, switch this option up here to based on model portfolio, and then just set which portfolio I want them to follow, right? So in this case, I can say, hey, this is going to be a pretty aggressive account. This is an 80-20 split we set up before. Press save, and that's what the account is now allocated as. Very simple. So again, what this just did for me is just cut out a lot of the legwork on having to actually allocate this account. Again, if I wanted to, I could go to enter holdings / asset class, go in and actually, again, just go in and start. That's a little bit off. There we go. Just start adding these in, manually, right? I could say, okay, they got that. Great. Okay, now they got VU. They got, 20 shares of that as well. That's got a 50,000 or let's say $5,000 cost basis. Save. Great. They got it in there. I could spend a ton of time setting this up manually, right? And maybe have their Excel sheet, pulled up in a different window and do all that. Or if I just know what the return on the account should be, great. Enter total balance. I know it's got 60 grand in it. I know they've put in 30. It should be this model portfolio. We're done. That's it, right? So again, the benefit here is if you have it set up ahead of time, setting these accounts up becomes much, much easier, right? So that's the first use. Again, if we're just adding investment accounts, you can easily jump in, assign the model portfolio. You're done. You don't have to do all that account work manually. I don't have to dive in, put these all in manually. I don't have to set the asset classes manually. None of that. So that makes it much, much easier, right? So that's the first way to do it. The second big impact that a model portfolio can have on a plan is actually under this investment section. So if I click into investment here and then go to asset allocation. So it's the very first tab that comes up under investment here. And what you'll see is that we have two different sections. So we have the current allocation and the target allocation. Now, what's important here is that the current allocation is pulling directly from those accounts we set up in profile. So if I go back over to profile super quickly, I have these 4 accounts, right? I got this Millennial Brokerage that's 100%, equities, very aggressive. I got this 401k that's 55-45, 73-27 401k, and a 93.7 brokerage, right? So overall, decently aggressive portfolio here. Now, I'm obviously only seeing these on their specific asset allocation. I actually have to open each account to see that. If you want to see all of them combined as a total portfolio instead of just individual accounts, I go to investment and it's right here under current allocation. So for all accounts, they are a 79-21 split. They're seeing an annual return, based on our return assumptions of 10% with a pretty high volatility of 13.5%, right? So that's where we're going to pull that number from. I can still pull up the individual accounts here So I can go to, for example, like joint brokerage and pull that up and see exactly what its return is, right? Or same thing for brokerage. This is going to be very, very high. However, I can see what these are for all accounts. Now, the reason model portfolios come into this is because of this target allocation option on the right-hand side. So if I go over to target allocation here, you can see this drop down is actually just all our model portfolios. So again, I've got a ton in here, but I can say like, hey, we have you at a 79.21. That's pretty aggressive. Maybe I don't recommend that. Maybe you're getting a little bit older. We don't want you, that at risk any longer. What we want you to do is pull you down back to let's say a growth, right? At the very least, we want to get you down from 79.21 to 70.30, from a return of 10% to 9% roughly, with a much lower standard deviation to kind of match here, right? We're only dropping our returns by like roughly 1%, but we're dropping these almost by 2%, hopefully to kind of reduce your risk a little bit. So the kind of point here is that now one thing I want to be very clear of, and it's actually going to show this right here. The target allocation is not changing the return percentages for the system. It's not what it's doing. When I come here and set target allocation to growth, it's not actually changing the annual return percentage I see in something like retirement to 9.9%. It's not what it's doing. What it's actually doing is saying, hey, if you were to switch from this to that, right, from current allocation to the target allocation, what would that actually look like? Well, you have a pretty steep drop in U.S. equities, right? We're going from 79% U.S. equities down to 43. We're actually buying into some international equities, some emerging markets, some real estate, right? We're getting a little bit more in bonds, getting some international bonds, actually reducing a little bit in cash, right? It's basically trying to show you like, hey, if you were going to go through with this switch, what would that actually look like? What would the percentage of asset classes in your plan start to look like? And go to the action items in this section as well. It'll just give you a pretty basic number of like, hey, this is the dollar amount you have in U.S. equities. This has to reduce. And lastly, if I go to detail, this will give me a little bit more of a detailed report saying like, hey, we're currently at 49.9% in large growth U.S. assets, U.S. equities. We're trying to target only 16.5%. So we need to see a reduction of 28.4% in U.S. equities, right? So again, very important. It's just trying to show you what the difference between their current portfolio, aka the one we already have set up in profile, is, and the one we're trying to get to. It's really just visual. That's really the only point of this. That's what we're really going for. Now, another kind of important feature of model portfolios is we can actually switch the returns of a client's plan from their current allocation to a model portfolio. So I know I mentioned you can't do it here, right? If you switch the target allocation to growth on this one, again, it's not changing anything in the plan, right? It's just a visual. But if I actually wanted to do that, I can go to retirement, right? And in one of my proposed plans, so if I go to retirement analysis, this is where we actually set up a proposed plan, right? I can go to the action items, and for this asset allocation item right here, I can actually switch them to one of my model portfolios. So for example, I'm like, hey, whoa, we're way too aggressive in our assets. I'm really not happy with that. That might put you at risk. Obviously, in this plan, they're not really at risk. But in this case, I think this is going to put you at more risk than we're seeing. I want you to go down to growth. I can refresh and actually see what the impact would be on the plan because of that. We're probably going to see a steep drop there. Yeah, there we go. We dropped in assets quite a bit. But ultimately, we can display now what the difference in those returns looked like from one plan to another. So that's kind of the extra use of model portfolios is like, look, even if you're not going to use one of these portfolios for an actual account that a client already has set up, these can also act as effectively like test cases if you want to show something, a different scenario to somebody, right? So you can give them like a different portfolio that you generally think is recommended and say like, hey, if we switch you to this, this is the impact you would see between the two plans, right? In this case, let's say current plan was just a really aggressive growth. We can say like, hey, just because we're losing some return percentages doesn't mean we're not benefiting from it. The reduced in risk is actually increasing the plan's success rate because we're not so dependent on higher returns or something like that to get to the end of the plan. We have enough money, we can kind of live off of it and stay a little bit less risky with our investments. So that is also a very important part of this. So I definitely wanted to mention that as well. Last thing I'm going to go over within a client plan specifically for model portfolios is You can actually use them to try and compare a couple of different allocation methods. What do I mean by that? If I go to investment, go to allocation path, there are a couple of different ways to show what your asset allocation over time looks like. Now, this is connected to a setting. I'm not going to go super in depth on this today. I'm just kind of trying to show the value that the model portfolios have today. But for example, if I go to the gear icon in the very top right, go to settings, give that a second to load. And then on this very first page right here, so again, gear icon, settings, methodology, it's the first tab. I can scroll down to this one that says allocation method, and it actually tells me like, hey, how are they allocating their assets over time? The default for most plans is going to be same allocation for all years. So whatever we allocate their accounts at right now, that's how they're going to stay allocated for the entirety of the plan. Now, as soon as you hear me say that, you're probably thinking in the back of your head, nobody keeps the same allocation for their entire life. That doesn't make any sense. That's not sound planning. You're completely right, which is why we have different options in here. Now, you could technically do this. Again, there's nothing necessarily wrong with this, but obviously, if you want to get more detail in the plan, it's typically better to switch to a different option. For example, if the client is very young and we don't want to keep them on a very aggressive portfolio for a very long time, right? Really easy thing I can do here is just go to pre and post retirement allocation, right? And then actually just set what the post-retirement allocation should be. And this is, again, where these model portfolios are going to show up, right? So I can say like, hey, after they retire, they're going to switch to a moderate allocation. I'll actually save that right there. And we can actually see that change now in their allocation path. So as soon as they hit retirement and whatever year that is, they're actually going to drop their equity percentage down from, 79% to 60, right? And I can also switch it here and try and get an idea of what that'll actually look like, despite my changes. Maybe I put them all the way at preservation. They have a giant, sell off of equity once they hit retirement. Whatever the options are, you can plug that in. But again, it's all based on these model portfolios, right? You don't really have the option to dive in and create like a custom allocation that the account will switch to. You kind of need to use one of these options we've already built up to actually set what that'll be, right? So another very important use of this, again, allocation method has a little bit more detail to it. I'm not going to dive in on the rest of that today. It's not really what I'm here for. But just again, trying to show you that model portfolios are used for more than just plugging in direct investment accounts. There is some flexibility they provide. It does allow you to test different scenarios. No, that is basically it for most of the use of model portfolios in the system. Before I jump to the Q&A, there's one last thing I want to show that can be helpful with model portfolios. I did recommend this a couple of times. This is not right for everybody, but depending on the advisor, this can be kind of helpful. So this is definitely something I recommended occasionally. So if I go back out to my advisor portal, I'm actually just going to click this link right here, right? This will bring me back to the advisor portal. I can go to models. Now, something common I came across when I was working on the support team was every once in a while we would have an advisor reach out and say like, hey, I see that you got the model portfolios. I see I can plug in the holdings and the assets and all that. Whatever. I see I can do that. But what I really just want to do is just plug in a flat return percentage, right? I see you got all these investment assumptions and whatever. That's nice, but I really just want to have a plan where I can say they invest at 5% and that's it. And then I want to be able to change it from 5% to 6% and 6% to 7% or whatever, right? That's how I want to set it up. Now, while we're not necessarily built to do that out the gate, we have these return assumptions. That's not exactly how we're set up. You can theoretically set up a system like that with model portfolios. And again, I'm not going to go through the entire process of how this works. I'm not going to set up like tons of these, but something you can do because it tells you what the expected return percentage is going to be. You can go in, add a portfolio. Let's call this let's say the 6% portfolio or something like that, right? Check it off. Actually, I can just leave it at this. Let me do this. I'll just set it to 6%. Make it even simpler than that, right? And I can go in, and now you might have to adjust it a little bit. We don't have an option to just switch it to 6%, so do keep that in mind. But I can just go in and effectively kind of just play around with these options until I get to the return I'm looking for. And I do have to do a little bit of trial and error. Again, like I got to keep reducing this. Let's say we're actually going to bring it all the way down to 30. This will go to, what do we add? Need an extra 20%. Save. Great, we're at 9. We'll just keep lowering it. Let's say this is now only 10%, and this is going to be 40. Get rid of that extra 0. Down to 7. We're getting even closer. Let's say this is 5%. This goes up to, let's do 50 on this one. There we go. Let's set this to 45. Kind of switch these two. Press save. And we're getting pretty closer. So again, I'm not going to go through this whole process, but again, if you just want to set something up like that, it's going to take a little trial and error, but you can just do it. And then once you do it, you just have them available, right? You have your 6% portfolio, you have your 7% portfolio, you have your 8%. So again, I don't necessarily recommend it. This is definitely not for everybody. This is if you have a very specific way of planning or just how you want to model returns. Again, not necessarily something I recommend unless you're really looking for that. But this isn't an uncommon situation either. If there was anybody who was just looking for something like that, this is how I kind of recommend they set it up. Again, not a perfect solution, but definitely something I recommended a decent amount. So I just wanted to throw that in there today. And with that, that is effectively most of what goes on with model portfolios. Again, I know this might not have been the most complicated webinar in the entire world. This is definitely not like an in-depth view of like tax planning or anything like that. But we really wanted to dedicate some time to this today because it is very important. If you don't know how to use model portfolios, your experience in RightCapital is going to be more difficult. So it was very important that we kind of showed this off today and make sure everyone was using this properly.